Before we dive into details, I want to give you a quick roadmap of what we'll be covering in today's session, so you'll know what to expect. We'll start by walking through the eligibility requirements. In other words, who can apply to become a CDE, and the basic qualifications you'll need to meet before you even start the application. Next, we'll go over the application timeline and types, so you understand the key deadlines, the different application windows, and how those might impact your planning. From there, we'll review the CDE certification criteria. This is the heart of the process and where we'll spend a good amount of time. We'll talk about what the CDFI fund looks for when evaluating an application and how you can make sure your submission checks all the necessary boxes. We'll also take a closer look at the sources of accountability, which is one of the most important and sometimes most challenging parts of the application. This section will help you understand how to demonstrate that your governing or advisory board represents the communities you intend to serve. After that, we'll summarize some key takeaways and common pitfalls. These are the recurring mistakes we see applicant CDEs make and the practical tips that can help you avoid them. We'll spend some time discussing material events related to accountability, meaning what happens after you're certified. We'll wrap the main presentation by sharing resources that are available to help you, from guidance documents and FAQs to points of contacts and additional support tools. Finally, we'll close with the Q&A session, where you'll have the chance to ask questions and get clarification on any of the topics we covered today. So with that overview in mind, let's jump to the first section, the eligibility requirements. When we talk about Community Development Entity, or CDE, we're drawing directly from the Internal Revenue Code, Section 45D, subsection C, paragraph 1. That section sets the foundation for what qualifies as a community development entity. So let's briefly go over the requirements. First, the entity must be a domestic corporation or partnership. This is the legal entity requirement. It means the organization has to be formally incorporated in the United States, either as a corporation or a partnership. Without that legal status, it cannot be recognized as a CDE. It is important to note that a single member LLC standing alone does not meet this requirement unless it has been selected to be treated as a corporation for federal tax purposes. Once these legal requirements are met, we move on to the next criteria, primary mission. The applicant's primary mission must be serving or providing investment capital for low-income communities or low-income persons. This requirement ensures that the organization exists to benefit economically distressed people or places, not just general business enterprises. Third, the entity must maintain accountability to those low-income communities. That accountability has to be real and documented, and has to be shown through representation on a governing board or through an advisory board that provides meaningful input to the governing leadership of the organization. The idea is that a community and its residents have a voice in shaping the entity's activities. Meeting all these requirements culminates to a successful certification application. A successful application is what formally recognizes the organization as a CDE with the CDFI fund. Now, there's an important point here. While CDFIs and specialized small business investment companies, or SSBICs, designated through the Small Business Administration, are presumed to meet these requirements for CDE certification, they are still required to provide additional information. The CDFI fund needs this information to properly assess whether the entity meets the accountability requirement for CDE certification. Simply being a CDFI or an SSBCI doesn't remove the need to demonstrate this requirement. It is also important to note that this requirement does not mean applicants create a new governing or advisory board itself. Instead, applicants must create new board records specifically for CDE certification purposes. A board record used for CDFI certification application is not acceptable for CDE certification. I'll flag here that we'll go into more detail about CDFIs and SSBICs later on in the webinar, but for now, just keep in mind that CDFIs and SSBICs have to meet the same accountability expectations as every other applicant. Now let's connect the CDE certification to the New Markets Tax Credit Program. The first thing to understand is that before an organization can do anything with the CDFI fund, whether it's applying for certification, reporting compliance, or competing for awards, it needs to create an AMIS profile. AMIS, which stands for the Awards Management Information System, is the CDFI fund's online platform where all of those activities take place. So while creating a new profile is unique to the New Markets Tax Credit Program, it is the very first action every applicant must complete. Second, CDE certification is required to apply for the New Markets Tax Credit allocation, but it does not guarantee an allocation. And while CDE certification is required to apply for an allocation, non-CDEs can still participate in the New Market Tax Credit Program as an investor, as a qualified, active, low-income community business, or even as a project sponsor without being certified as a CDE. The distinction is that the CDE certification is the doorway if your organization wants to apply for and receive an allocation of tax credits, but for other roles in the program, certification is not required. And if you need help navigating any part of the New Markets Tax Credit process, whether it's understanding the program, preparing your application, or exploring resources, we strongly recommend visiting the New Markets Tax Credit Program page on the CDFI Funds website. There you'll find program guidance, application materials, frequently asked questions, and contact information for technical assistance to help walk you through each step. Please visit www.cdfifund.gov/NMTC for New Markets Tax Credit. Now let's talk a little bit more about CDFIs and SSBICs. A common misconception is that if you're a certified CDFI or an SSBIC, you're automatically approved for CDE certification, and that's not necessarily the case. You're presumed eligible if you've already obtained CDFI certification or an SSBIC designation. However, presumed eligibility does not equal automatic approval. You'll still have to meet all of the CDE certification requirements. AMIS offers a fast-tracked or expedited application that will still need AMIS records. One important note about the records: even though you may have already have a board or target market records for your CDFI certification, those cannot be reused for your CDE application. You have to create new distinct board and service area records specifically for CDE certification purposes. To help facilitate with that, we have new video tutorials and supplemental guidance that walk you through step-by-step to creating and submitting these records in AMIS. We strongly recommend you watch and reference those materials before you start this part of the application. They'll save you a lot of time and help you avoid common mistakes we see. Should you run into any technical issues, please submit a service request in AMIS or email the CDFI Fund Help Desk at cdfihelp@cdfi.treas.gov. And just like with other applications, the accountability requirement still applies. Your advisory and governing boards must clearly represent the proposed service area for CDE certification. So yes, being a CDFI or SSBIC presumes your eligibility, but you still need to go through the full process, create new records, and demonstrate accountability for CDE certification purposes. A little bit more about the application timeline. CDE applications are accepted on a rolling basis. That is, you can submit an application at any time. However, if your organization plans to pursue a New Markets Tax Credit allocation, it is critical to pay attention to the deadlines published in the Notice of Allocation Availability, or NOAA. These deadlines are specific to New Markets Tax Program and are not tied to the CDE ruling application process. If your goal is to apply for the New Markets Tax Credit allocation, plan your certification well in advance so that you're ready before the details are announced. And if you have any questions about New Markets or the NOAA itself, those questions should go directly to the New Markets Tax Credit Program at CDFI help at cdfi.treas.gov. So this slide gives us a better picture of the types of CDE certification applications. We'll start with the initial certification, which applies to organizations that are not yet certified as CDEs. Type A is for organizations that are applying for only themselves. It's straightforward, only information for the applicant CDE. Type B is when the applicant CDE wants initial certification to cover itself and one or more subsidiary CDE. Then we have the CDE, CDFI certified application, which is for organizations that are already certified as CDFIs or designated as SSBICs, but now want to obtain CDE certification for the first time. The second category of application type is modification, which applies to organizations that are already certified as CDEs. Type C covers cases where a certified CDE wants to add subsidiaries under its certification. And finally, we have the service area amendments application, and those are for certified CDEs that need to expand or adjust their approved service area. It's important to keep in mind this distinction. If you're applying for the very first time, you'll fall under one of the initial certification applications. And if you're already certified and need to make changes, you'll select an application under modification. So now we'll dive a little bit deeper into each requirement. To be a certified CDE, the applicant must be a duly organized and validly existing legal entity. That means that it must be formally established under U.S. law and in good standing. The entity must also be treated as a domestic corporation or partnership for federal tax purposes. This is a key point. The fund will not certify sole proprietorships, foreign entities, or single member LLCs. LLCs are acceptable, but they must be taxed as a partnership or corporation. A single member LLC that is disregarded for tax purposes would not meet this requirement unless it has made the election to be taxed as a corporation. That election is made by filing and submitting an IRS Form 8832 with their application. This form allows the LLC to formally choose corporate tax treatment. So the bottom line here is whatever form your organization takes, it must be a U.S. legal entity and must have a tax classification that lines up with either a corporation or partnership. Once the legal entity requirement is satisfied, we look beyond a legal structure and tax treatment to the purpose of and activities of the entity, specifically whether its mission aligns with serving low-income communities or low-income persons. This leads us to our next requirement, primary mission, which comes from the statute of the Internal Revenue Code. To meet this test, the organization must demonstrate that its primary mission is serving low-income communities or low-income persons. This isn't just about intent. It has to be clearly documented and governing leadership approved. Applicants are required to show proof of primary mission through written materials, such as mission statements, organizational charters, articles of corporations, bylaws, and other governing documents. These documents must be governing leadership approved and or binding. And by binding, we mean that they are official documents that include proof of formal approval, either by a state or regulatory body or by the organization's own governing body. We are looking for explicit language that ties the organization's mission to serving low-income populations or communities. So in short, the primary mission test is both what's written on paper and what's happening or intended to happen in practice. You'll have to connect your governing board documents with tangible evidence of activities that advance your mission in low-income communities. And of course, two important exceptions to this are the CDFIs that are currently certified by the CDFI Fund and SSBICs. Those organizations are considered to have met the primary missions test by virtue of their active designation or certification. That means they do not have to submit additional documentation to establish their mission. Their status as an actively certified CDFI or an SSBIC satisfies this requirement automatically. Let's look at some examples of acceptable primary missions that would satisfy this requirement. One example is an organization whose mission is financing or investing in low-income communities, targeting underserved areas. Another example is providing affordable housing for residents of low-income communities. We also see missions focused on revitalizing distressed or underserved communities more broadly. For example, bringing in investment to redevelop neglected areas or expand economic opportunities. And finally, missions that expand access to community facilities, such as healthcare centers, community childcare facilities, or schools and low-income communities are accepted as well. The key is that the mission must clearly and directly tie to serving low-income communities or low-income persons, not in general terms, but as the organization's primary purpose. Next, we have the accountability test, which is also defined in the Internal Revenue Code. This requirement ensures that a CDE must maintain accountability to residents of low-income communities. In other words, it's not enough to simply claim you're serving LICs through your primary mission. The structure of your organization must demonstrate that the people in those communities have a voice in your governance. Accountability is achieved through representation on governing or advisory boards. That means individuals who live in or otherwise represent the low-income communities you serve must hold seats and have a real role in guiding the organization. Now, this requirement has consistently been one of the most challenging for applicants. So we're going to spend the bulk of our time today placing special emphasis on accountability. We'll go in greater depth on the specific board requirements for certification, what's expected when applicants rely on advisory board to demonstrate accountability, and how to effectively show that your board members are truly accountable to the low-income communities you serve. By the end of this, you should have a clear understanding of how to meet the accountability test and avoid some of the most common pitfalls we've seen in applications. Let's focus on how an organization board can meet the accountability test through board representation. First, if you're relying on your governing board, at least 20% of the members must be representative of the low-income community, or LIC. At minimum, there must be 2 members on the board. The same rule applies to the advisory board. That is, an advisory board must also have at least 2 members and at least 20% LIC representation. When we say representatives, we mean individuals who are either residents of a low-income community or are otherwise accountable to those communities. That it could include business owners, nonprofit leaders, religious leaders, or other individuals whose roles or experiences connect them directly to the LIC. The key point here is that accountability isn't symbolic. It must be measurable and documented through actual board representation. Now, when we talk about the governing board, we're really talking about the top level of authority within an organization. This is the group of individuals who are legally responsible for the organization's governance, control, and overall direction. In other words, they set the tone, they make the big picture decisions, and they ensure that the organization stays on mission. The governing board also provides oversight, making sure that the policies are followed, finances are properly managed, and that the leadership is held accountable. At the end of the day, this board is legally responsible for the management and compliance of the organization. That's why their role in the certification process is so important, because it shows that there is a clear structure of accountability and authority guiding the organization. As we took a closer look at the advisory board, however, it's a little different. Most advisory boards are not considered the highest level of authority in the organization. Advisory boards are made up of individuals who bring expertise, community perspective, or professional experience, but the role is to provide non-binding advice and recommendations. This means that they don't carry the same legal responsibilities as the governing board, aren't legally accountable for the governance, management, or compliance of the organization. Instead, their role is to support and advise those who do hold that responsibility, namely the governing board. To put it simply, advisory boards are a sounding board. They inform, they recommend, they provide guidance, but they do not have the authority to act or make binding decisions on behalf of the organization. That's the primary role of the advisory board. And next, we'll talk about the advisory board mechanisms, that is, the ways advisory boards must function to demonstrate accountability for CDE certification purposes. When an applicant uses an advisory board to meet accountability, additional information is required. CDFI Fund wants to see real details about how that board works and how it connects to the community it's serving. That's why the narrative section of the application is so important. You'll need to cover a few specific points. First, talk about the number of members on your advisory board, and specifically how many of them are accountable to the low-income community. Remember, it's not just about filling seats, it's about showing that LIC voices are represented. Second, explain how members are selected. Are they nominated by community groups, elected by residents, appointed by your governing board? This helps us understand how tied they really are to the people you're serving. Third, tell us about the frequency of meetings. The fund expects advisory boards to at least meet annually, but in practice, more frequent engagement is often a stronger evidence of accountability. Next, describe how feedback is gathered and used. Do advisory board members bring in input directly from residents? Do you use surveys or community meetings? Once you have that feedback, how does it actually influence your organization's decisions? And finally, make the connection between the advisory board and the governing board. Does an advisory board member sit on the governing board? Does the advisory board regularly present reports that leadership has to review? This is critical because it shows whether community voices are really being heard at the decision-making level. So when you put together this narrative, think about it as telling the story of how your advisory board isn't just symbolic, and that it's a working mechanism for LIC representatives to shape what your CDE does. Now that we've covered the basics, I'll pass it over to Shantae to walk us through the details.
Thank you, Jennifer. I will just insert here that this would be a good opportunity for, if you have any questions, because we will have a Q&A session, to start raising your hand so that you can get in queue for to be pulled to the stage for your questions, as well as you can start putting your Q&A questions in the Q&A box so that we can respond. We do have team members that are able to respond to those questions as well. So let's get started. There are different ways both governing and advisory board members can be accountable to low-income communities or persons. These connections are demonstrated through providing clear sources of accountability, such as residency, business ownership, or leadership of organizations serving those communities. The purpose of sources of accountability is straightforward. They demonstrate that the board members truly represent the service area. This isn't about general support or good intention. It's about concrete ties. Where someone lives, the community they belong to, or the population they serve all provide the evidence the fund requires. These connections ensure that your governing or advisory board includes individuals who are genuinely accountable to the community you've identified. Stated in another way, sources of accountability are proof points or receipts that confirm that your board composition meets certification standards. That means hitting the required accountability threshold at a minimum of 2 people, or at least 20% of your board. Keeping an advisory board that meets regularly and a governing board by the required standards, maintaining up-to-date documentation, and ensuring no conflict of interest. Together, these elements demonstrate the accountability isn't just claimed, it's substantiated and verifiable. Let's talk more about different ways you can substantiate that your board members are accountable. When accountability is based on your board member being a resident of a low-income community, the idea is simple. The board member must actually live within a qualified new market tax credit census tract that's in your proposed service area. This form provided in Amos is how you show that. You'll see fields for the street, city, state, zip code, and census tract. The key here is to make sure that the address is complete and the census tract field includes the correct FIPS code, a code that identifies geographic areas. That's what allows us to verify the residence is in a qualified census tract. Now, a couple of important points. The address you provide has to be verifiable, so you need to submit complete information. The FIPS code is especially important because it ties directly to the new market tax credit eligibility. So when filling this out, make sure you're not just giving an address, but also confirming that the tracts in the new market tax credit census area are eligible. Remember also, accountability only works if it's clear that the board member lives in the LIC and is part of the community being served. So we use this form to clearly connect the dots, the board member's address, the FIPS code, and the service areas you're proposing. That way, it's easy for the fund to confirm that the person truly represents the residents of the community. When we talk about accountability through board member being a small business owner, what we're looking for is whether the board member qualifies as either owning, controlling, or operating a business that's physically in the new market tax credit qualified census tract. And importantly, that the business serves low-income community residents. So it's not just about having a storefront in the right zip code. The business has to be accessible and service the people in that community. That means we need a few key things documented. First, we need the business address and a FIPS code so we can verify it's in the new market eligible area. This is required to assess. Second, the business itself has to be legitimate and ongoing. It cannot engage in what the CDFI fund considers prohibited activities. So no golf course, no racetracks, no liquor stores, no massage parlors, nor tanning salons. That does not qualify. Finally, we look at whether the business actually serves or hires residents in the community. If the business name is vague sometimes, or something like Johnson Consulting Associates, we'll dig a little deeper into this information to make sure the products or services really reach low-income residents. Bottom line is small business owner counts as accountable only if their business is located in the right place, provides the right kind of services, and can be clearly documented. This ensures the board member really has a stake in and a connection to the community the CDE is claiming to serve. This form is where you capture the information. Let's walk through it. We have the business name, the address, the state, and the zip code. These fields establish the physical location of the business. This has to be in a new market tax credit eligible census tract. You'll want to double check your FIPS code. Description of goods and services. This is where you tell us what the business does. It's important because the fund looks at whether the products or services are actually useful to the LIC residents. For example, a grocery store in an LIC clearly qualifies. A golf course or a liquor store does not. Census tract. This is the critical field. You must enter the FIPS code for the tract where the business is located. This is how we verify eligibility. Explanation of employed LIC residents. If your business primarily hires local residents, here's where you can explain that. This isn't just a check the box field. It helps us to see that your operation really ties back to the community. So when you complete this form, think about it as telling a story of how these board members' business connects directly to the LIC. If the business location is eligible, if it avoids restricted industries, and if it primarily serves or employs LIC residents, then it will meet the fund's accountability standards. Another example of source of accountability. When a board member comes from a non-affiliated charitable or community-based organization, the key here is that the organization's mission and activities must be directed primarily to low-income communities or persons. That's what makes the representative accountable. There are some requirements that applicants need to make clear. First, the mission statement of that organization has to show that majority of its activities serve LICs. Second, the service area of the organization should overlap with the applicant's CDE service area. And finally, the organization itself cannot be affiliated with the applicant. It has to be independent. What it really means is that the applicants need to describe and document how this representative brings a real connection to LICs. Reviewers are looking for evidence, not just names on a list. That's why when you see these fields in AMIS, where applicants have to explain the organization's primary activity, provide details about the service area, and confirm the LIC's focus. In the case of the primarily served or primary activity, the CDFI funds means 51% or more. So the bottom line here, if you're using a community-based organization representative as a source of accountability, you need to show the overlap, the independence, and the direct tie to serving the low-income community. Let's look at another example of source of accountability, a religious leader. This is any leader with a faith-based organization. What matters is that their physical building is actually located in the low-income community that your CDE is serving. The connection to the place, that connection to the place is what establishes their accountability. When you enter this information into AMIS, you'll need to make sure you include a verifiable address or the full FIPS code for that location, ideally both. That way, reviewers can confirm that the religious leader is tied to the community in a concrete way. And you'll see on the slide and the screenshot of how this looks in AMIS. Those are the fields that you'll be filling out. And the takeaways from here, don't just say that someone is a community or a religious leader. Show the evidence that the organization is based right in the community you've identified. Here we're looking at another possible source of accountability for the board members, being an elected official or working for one. The key point here is that an elected official is considered accountable when their constituency includes or is primarily composed of residents of low-income communities. That means either at least 50% of the census tract in their jurisdictions are qualified LICs, or at least 50% of the residents are LIC residents. Now, to meet this requirement, applicants must be able to demonstrate that at least half of the constituencies served by the elected official, is LIC based. This information is based here, so you'll provide a narrative. This ensures that the official's representation truly connect back to the communities the CDFI fund is connected with. On the right-hand side, you'll see the AMIS data entry screen. This is where you'll capture details like the elected official's name, their agency or department, their jurisdiction, and a brief explanation of how the constituencies qualify as LIC based. So the takeaway here is elected officials can be a strong source of accountability, but the burden is on the applicant to document the geographic area and show that the majority of the constituencies align with LIC requirement. Another way to demonstrate accountability is through their employment with a government agency. But it's not just any government job that qualifies. The agency department where they work must primarily serve low-income community. That means the agency needs to have an explicit mission to serve LICs, that it can, that it can't just be incidental or part of a broad mandate. For example, a city's housing department that is specifically dedicated to affordable housing and low-income neighborhoods would meet this test. So when you identify a government agency employee as your source of accountability, make sure you clearly describe how their agency's mission directly supports low-income communities. Otherwise, the source of accountability will not qualify. Let's pause here and pull together with some key takeaways. First, one of the most straightforward ways to show accountability is providing a verifiable new market tax credit eligible address or FIPS code. This can be a board member who is a resident of a low-income community, a small business owner operating in a low-income area, or even a religious leader serving that community. Second, we look at a mission alignment. This means showing that the organization has a board member, is connected to, and has a core mission of serving low-income communities. I'll say that again. This means showing that the organization has board members that is connected to and has a core mission of serving low-income communities. That could be a charitable or community-based organization where most of their activities benefit LICs, or it could be a government agency employee. But remember, the agency itself must have a mission focused on serving LICs. And finally, accountability can also be demonstrated through representation. An elected official can qualify as long as at least half of the constituencies come from low-income communities. So the key message here, whether it's residency, business ownership, organizational mission, or elected representation, the source of accountability must be direct, verifiable, and clearly tied to low-income community. Now let's do a quick recap of some common pitfalls, things we've seen in applications that have gone wrong and that you will want to avoid. Some of the most complicated pitfalls we see in the CDE application certification. First, employees of an applicant CDE cannot be counted as accountable representatives. I'll say that again. First, employees of the applicant CDE cannot be counted as accountable representatives. Accountability comes from individuals who represent the community, not from people who work directly for the applicant organization. Second, addresses and FIPS codes must fall within the new market tax credit eligible area that qualifies as distress. It's not enough to provide any address. You have to make sure it's in line with new market tax credit eligible criteria. And finally, partial or incomplete FIPS codes are not acceptable. The codes you provide must be complete, precise, and verifiable. If it's incomplete, the application will not meet the requirements. These pitfalls may seem small, but they're some of the most common reasons applications are flagged or delayed. So pay close attention to these details to avoid unnecessary setbacks. You do not want to include any of these in your application. Another set of pitfalls we often see relates to how applicants try to prove accountability. Social media accounts, LinkedIn, Instagram, etc., are not acceptable forms of proof. They might show employment or community involvement in a general way, but they are not considered verifiable documentation for certification purposes. Avoid vague language. If the information you provide doesn't clearly demonstrate a board member's ties to a low-income community or primary mission, the application may not meet the requirements. And finally, primary mission statements, bylaws, board resolutions, any internal documentation you're using to substantiate your primary mission must be board approved or binding. Similarly, organizational documents, that is articles of incorporation, articles of organizations, etc., should have fully been processed by the state or federal regulatory and must include a seal or file stamp. So the takeaway here is simple. Documentation has to be formal and binding. If the evidence isn't strong enough to stand on its own, it will likely result in a rejection. Finally, accountability has to be continuous. Once you've obtained your CDE certification, you're expected to keep and maintain accountability over time, not just once. If a board member's source of accountability changes, for example, if they move outside of the approved LIC service area or step out of the role that makes them accountable, the accountability is no longer valid. Certification requires you to maintain those ties, not just establish them once. Along with this, we strongly recommend that when you name your organization board record, whether during your initial application or when you're updating through a material event, you use a clear, consistent naming convention. The format we suggest is your organization's name, the underscore, the board type, and we also ask that you include the month and the year of creation. For example, we'll use Acme. So you'll have Acme Capital Fund underscore advisory board. In parentheses, you'll put the year September 09, 2025. On the off chance that you have to update your board record more than once in the same month, we ask that you please include a number at the end of your naming convention. This way, both your organization and the CDFI fund can quickly identify when the board record was created or last updated, which makes tracking much more efficient. And here's the important part. This is about remaining compliant. It requires some housekeeping. Forgive me. It requires some housekeeping. If there are changes to your board's accountability, you will need to submit a material event in AMIS. The CDFI certification website has resources that walk you through how to do this. However, when you submit a material event, you should also update your organization board record in AMIS to represent that change. Submitting both the material event and creating an updated board record together goes a long way towards expediting the material event, the review of the material event, because this will allow us to have everything we need at one time, the material event form and the updated board record in one place at the time of submission of your request. Again, here are a few resources that you can find and can be found on the CDFI Fund's website. The best way to reach us with any questions is through the AMIS portal by submitting a service request. Now we're going to prepare for our Q&A session. Now that the presentation has concluded, we are now embarking on the Q&A session portion of the webinar. You can enter your questions in the Q&A portion of the Zoom. When you get to the point, we ask that you follow the instructions where each caller will have 2 questions, or it will be a question and a follow-up question. After a participant has asked their question or questions, they're more than welcome to immediately queue up again and ask another question. during today's call. We will get as many participant questions as possible. For those who don't get in line, we do apologize in advance, and we encourage the submission of your question to be in writing via service request in AMIS. And we're ready to take our first question.